Keenan, it's 9/18. It was a very up and down week on Wall Street last week as concerns about the long shutdown or a possible long shutdown and a failed debt ceiling resolution continue to grow. What impacts could this have on the economy as well as the markets and even your portfolio? Well, our money man, Bob Ingram with Ameriprise Financial, is here to offer us some advice. So, Bob, we've seen many thousands of furloughed government workers. They're off the job. How does the confusion stem or relate to those of us who don't work for the government but may rely on checks that come from the government like VA benefits or Social Security?
Well, the good news right now, Malcolm, is at least in the short term, those things, those benefits, those checks are really not impacted. Social Security, of course, comes from a different trust fund bucket, not funded annually by Congress. So that's at least right now certainly fine. VA benefits, same thing as far as medical benefits. You know, those are getting paid. Where it could happen is you, of course, have administrative issues or some slowdowns administratively.
So processing
certain things, and not so much checks, but really hearing new claims for, let's say, disability benefits. That's one impacted area. And if it really goes longer than October into even hopefully not November, then you could start seeing some things in the disability benefits, some of the educational service benefits, and things for like the veteran side of things. That could be an example of something that could be impacted. They'll have to come up with a resolution for.
Now, although it was an up and down week, things weren't too bad. I mean, as this continues to go, because there doesn't seem to be any end in sight, could things take a major turn for the worse? Well,
the markets, I think, have thought that, well, nothing major has happened in the first week. We can get through it. Hopefully, we've seen this before, unfortunately, in Congress where there's stalemates, and, it's just been all too familiar story the last few years. But really, it's a matter of we don't think anything major could happen. Now, as we get closer to the resolution of dealing with the debt ceiling and a real issue of, a risk of defaulting on debt, we went through that in 2011, of course, and we saw what happened to the markets. The days right up to that, it really went crazy as markets said, well, maybe something could really happen that we don't want to happen. So you have that, plus you have the earnings season actually starting, right now for the third quarter, and then expectations for the fourth quarter and into next year. And so there's been some not downgrades, but maybe lowering of expectations in some degree. So that could have an impact if there's some misses in earnings. But you also have the idea of you have some lowering of expectations. So if there's some beats on the upside for companies, then you could have some positive news. So you could really have these swings in volatility. We've got to at least be expecting that and prepared for that, because again, it's been a pretty quiet summer, everything else wise.
And I'm sure what everyone wants to know, with so much going on, should there be changes that we should be making to our 401ks or investment portfolios?
Well, the key thing is with volatility, you really don't want to start worrying about market timing. It's just too difficult. Even if you're trying to avoid a possible downturn in the portfolio for even a short period of time, you have to be right twice, because you have to then figure out when to get back in, and that can be very difficult. And it sounds great on paper, but that intestinal fortitude isn't necessarily there. Yeah. So what you want to do with changes is really look at your portfolio. Think about your allocation now. What is your proper allocation? Is it conservative or moderate? If you're overweighted in stocks, if you've had some gains this summer over the last year, you can trim some profits and get back to that target allocation again. And then as things change, you do the same review, and that works in strategy. But ultimately, following your long-term plan is still the most critical thing. If you're retired, you need income, have a source of income that's not going to be impacted by the market. Long-term, let the markets work for you. And if you're saving for the future and you're not nearing retirement, great opportunity to keep investing. And when the markets are down, you're buying more at low prices, which is a great thing for your long-term plan.
So don't do anything rash.
Exactly, right.